All right, what is up, guys? Today is May 28th, 2026, and today we're gonna be going over today's trade that I took, and kind of my thought process behind why I took it, and what I could have done better. Yeah, this is on gold, by the way, gold futures. So here's what we did. Right, we're gonna start with the daily bias. So if we go to the monthly time frame, right, let me just get rid of how do you okay. So if we go to the monthly time frame, we see that we already tapped into this gap um, 2 months ago, right? And this is the next month, and then this is the current month. So we already mitigated the gap. So there's really no reason for us to go down any lower. I mean, honestly, I don't know, right? Like we can't know for sure exactly what's gonna happen. But one thing we do know for sure is that the, the rejection block, the consequent encroachment of the rejection block, is going to be a significant draw on liquidity. So for me, I personally went to the weekly time frame, and then I did it here because it just gives you more detail, right? So weekly rejection block, consequent encroachment. So basically, I want price to draw towards this because I don't really care what it does after this. I just care that it draws towards this, and then it gets some sort of reaction. So either it goes higher and respects it, or it goes lower and disrespects the gap. I mean the CE, right? So either it respects it or disrespects it. It doesn't matter for us. All we care about is that it's just going towards that area, towards this area, right? So that's the weekly. So I'm kind of bearish on the weekly. And then for daily, I was initially bearish, but then we saw this SMT, right? SMT. So I was kind of like, all right, 50-50. We may go to it. We may not go to it. So that's kind of what I was looking for. And then if we were bullish on the daily, then I'd probably expect price to at least take out previous day high, or like up here. This gap already got mitigated, but like probably around here if we're kind of bullish, right? So those are kind of my ideas for the higher time frame. Higher time frame meaning the monthly, weekly, and daily. And I like to consider the 4 hour, 1 hour, and 15 minute as my medium time frames or mid-term time frames. I call them MTF, right? I have HTF, MTF, which are 4 hour, 1 hour, 15 minute, and then LTF is the 5 minute, 4 minute, 3 minute, 2 minute, 1 minute, and then 30 second. And even lower than that too. So on the daily I was bullish, okay? 4 hour. Man, I don't know why these keep popping up. So on the 4 hour, right, we got that same SMT. We're making gaps, right? I don't think this was here. Maybe it was. I don't know. But okay, this is like the 10 a.m. candle. So like it was probably here. All right, so we didn't exactly have this information back then, but now we do. Anyways, I was also bullish on here too, though we were going to the downside. I was bullish because we had this SMT, all right? And okay, we were actually pretty close to taking these lows, but I was still bullish because daily's bullish, right? Actually, no. I just kind of ignored this one because I didn't really see any of this information, right? I just kind of saw this or maybe this candle, and then I was like, okay, I don't really have enough information to make a decision about this. So I really didn't know if we're bullish or bearish on here. But then when we went into the 1 hour, it's a bit more clear, right? Yeah, okay, so this is a 9 a.m., right? So I was like, okay, maybe like some sort of retracement or reversal after I saw this 8 a.m. candle. So that makes sense. And then we were inside of this 1 hour gap. That made things really tricky. But anyways, that's a 1 hour gap. Let me turn on these drawings again. Okay. So yeah, that's my 1 hour gap. And then I'm gonna go to my 50 minute. There's a lot of stuff here, but all I was looking for was the standard deviation. All right. So for standard deviations, I look at pretty much any time after Asia, London, and pre-market before the AM session. So this is the AM session right here. I'll look for this, okay? and I saw this manipulation leg right here, right? So we manipulated higher and then went down lower. So I just took this leg and then I projected it. And I have all these levels, right? And the -2 level basically means that we're going to expect some sort of reversal, right? So I was trying to take a standard deviation trade because I like the higher RR, right? I don't really think I've talked too much about standard deviation, but I'll explain that concept later. But basically, I was looking for a reaction off of this and trying to trade this basically, but it didn't happen. It took us a while to actually get here and here, but we didn't even go here. But anyways, so I did this. This tool wasn't like super useful, I guess, in my trading session, but I still marked it out. It was good for draws and liquidity though. And then in terms of the actual trade, I took it over here. So let me just go on replay real quick. Okay. It's on the 15 minutes. Maybe we'll go to the 5-minute first. And then let's just take a look at. Okay, we'll just start here. Okay. So this is like actually a pretty tricky trade. Okay. Let's go to the 15-minute. So boom, we have a 15-minute gap. Okay. Let me just get rid of this 1 hour. But just in your mind, remember that there's a 1 hour here. Okay. So this is gonna be your 15-minute. And then down to the 5-minute. So we were actually able to get an entry on the 5-minute. So 15-minute gap, we're inside of here. Then we let price do its thing, right? A couple minutes. And right here we had the inversion. Alright, so inversion for value gap. So this is exactly where I entered, and then I had my stop right over here at the bodies, right? And why at the bodies and not the wick? Well, first of all, it just gives me better RR, right? Like, why would I, give me slightly better RR? So I was like, all right, why not? Right? Because I don't really want to see price going back here after it's already mitigated to the gap. And then we have the inversion, right? If we have the inversion, that means we're going to have displacement to this side, right? The inversion simply, it means that we have displacement, okay? So if I don't see immediate displacement, that means either my analysis is wrong or maybe I entered at the wrong time. So that's why this stop loss is valid, right? You always want to pay attention to the stop loss before you even think about take profit, right? Like, your entry model is easy, right? Entry trigger is just find this thing, find this higher time frame thing, find the inversion, enter there. Like, that's cool. Like, anyone can do that. But when it comes to the stop loss, that's the most important thing, right? Because everything might be right. You might have a good entry, you might have good DOL, you might have good understanding of where everything's going. But then if you place your stop loss too tight or too far away, it can mess up your stuff. Okay. So this is where I place my stop loss, and then take profit. I actually placed at this. So what is this right here? This is 1800, or the 6 p.m. opening price. So right here, 6 p.m. I just did that as a draw on liquidity, right? Now, why did I target this and not higher? Well, first of all, this is kind of a little sketchy, right? We had a 1 hour gap. It just looks weird. We were still inside the 1 hour gap, so I just didn't really want to take an aggressive take profit. So I was like, yeah, let me just go for the easiest take profit and just take it, right? And it's already going to give me a 2.3 risk to reward. So that's more than enough, right? If I get a 1 to 2, that's a pretty good day, right? 1 to 1 is average. 1 to 2 is pretty nice. You want to have a 1 to 2 ideally, and anything above that is better. But for me personally, I was I'm just gonna take the low hanging fruit and just dip, right? Once I get my profits, I'm good. So that's why I personally didn't target higher. But if you were if you're this trade's gonna work out, and if you have other confluences and you're more confident for some reason, you could definitely target higher, and it would have worked out. All right, but I just didn't do that, and that's fine. So that's what I did. And then for my break even, I had my break even right here, right? Because internal high, and this is a great break even spot because it gives you nice, like it gives you a good amount of space before you actually do anything, right? Like this is around like a 1-to-1, like right here's a 1-to-1. So like the break even gives you more than enough room, like for error to happen, right? Like after this point, you don't want to see price going down. It's not like a super fast break even, right? Like I don't want to go break even right here because that's very close to my entry. The whole point of the break even is to keep you alive and to keep your trade alive, right? You don't want to just lose randomly because you get a fast break even. So that's why this is a very good logical break even point. Good stop loss, good take profit, right? Everything is good. We're entering on a high volume node. I think this is a point of control. I don't know, but it's a high volume node. So basically, we're gonna expect a lot of consolidation, and then we're gonna expect the market to move in one direction aggressively from this high volume node. So we had some consolidation, some chop here, and then inversion. Nice. We entered. Stop loss, take profit, break even. Perfect. Right. So that was kind of what we did, and then ended up playing out. Right, a little bit of chop here, but ends up doing this, and we actually don't end up going break even. That's because price just shoots up like that. Right, we don't even get a chance to go break even, and it does actually end up going higher. So that is pretty nice. I think I kind of like exited somewhere here because of my limit order. It kind of got me a little bit extra, so it's pretty nice. So yeah, that's a trade. Something I could have done differently was probably watch the markets a little closely, and I'll show you what I mean. So we had this entry, right, 5-minute inversion, but right here we also had another entry too. So this is a 15-minute gap. If we go on to the 1-minute time frame, I remember there was like an entry over here. So right here, nice. I get this. Honestly, like if you have the conviction for this, you can enter like right here, or you can just wait for the next candle. Wait, I think that's, hold up. Yeah, so this one right here, if you want the 5-minute time frame. Oh man, it's lagging out. Okay, so this is the same trade that we took. Okay, but I kind of wanted to point out this trade right here. So for this one, you have a 1-minute inversion. Okay, 1-minute inversion to the upside, but it's not like all the fair value gaps, right? You still have this 1-minute unfilled here, right? It just got mitigated, but it didn't get inverted through. So you could have waited for this, right? But sometimes what I'll do is, like, even though there's a gap above, and according to my rules, I'm not allowed to take the trade if there's a gap above, right? And we still haven't gone through it. It's like I'm not allowed to take that trade. But in this scenario, like if you had the conviction for it, you could take this, right? And this would actually give you better RR. Because like you're entering here compared to like entering right here, which is like slightly better, but you know, still does make a difference. So yeah, the reason I missed that entry was because I was focusing on NQ, right? And I kind of, you know, this was kind of in the beginning, right? Yeah, like 8 minutes in. So I was kind of on NQ. I didn't really look at that, to be honest. And would I, if I were to see that, would I take it? Honestly, probably not, because we were in this 1 hour gap, right? Remember, we're in that 1 hour gap. That's the reason why today was really confusing. It's because we were in that 1 hour gap. But I mean, it ended up playing out. And you know, Mech model hasn't really been working like too much, I'd say, like lately. It's decent and it does work, but it's not like as cracked as it was before, you know. but it's still really good. You know, we got a good trade today, so that's something that's good. So yeah, I'm mainly gonna be trading this, IFVG like mech model thing that I learned. This is gonna be my like main strategy, but I also have that standard deviation strategy that I created. All right, I watched a couple of other videos and I kind of created my own model for it, but basically allows you to take reversals, right? But today we didn't get that, so that's why I'm not talking about this model. But when you do use this model, it's absolutely crazy. It gives you tons of RR. So, if we do get a standard deviation setup, I'm definitely going to be making a video on that. So yeah, that's something I'm going to be doing. And then what else? Yeah, I'm like developing new models that I can trade in the markets. Developing like a continuation model, because like the Mac model, it's good, but sometimes like you just don't get the best setup. Today it was kind of weird, right? It's like awkward to trade inside of a 1 hour bearish for value gap. It just doesn't make any sense, at least for me, right? Did it work? Yes. And I also like went lower risk on it, so I used like 0.5% on my account instead of 1%. Right? If you're trading props, this is a good strat, but you can risk 0.5% instead of 1%. So yeah, I risked 0.5% on this trade, and it ended up working out. So it's kind of like give and take. It's like 50-50. It works sometimes, other times it screws you over. Right? It's really not about the model. Like the model actually works if it's in good conditions, but most of the time, like 90% of the time, you're never in good conditions. Like you're never in optimal conditions. So that's the issue. That's why I'm trying to develop new models. But yeah, um, yeah. I mean that's it for this video. Probably gonna do more of these once I every single day. I'm gonna do it. Even if I lose a trade, I'm still gonna post it. But yeah, the main lesson for this is lower your risk, have a good take profit, have a good stop loss, have a good break even point if possible, and actively look at the markets, right? Because here, this could have been a potential entry. I'm not saying I was going to take this, right? But let's say you do miss a setup and it's actually good, right? That's not good. Like you want to be taking setups that are the best for you, and if you're just missing them, then you're missing out, right? So one way we can start doing that is by setting alerts. So you can just do this. You can just set alert. I don't think you can set alert right here. Can you? Okay, I don't know how this works, to be honest. Okay, usually they have like a set alert thing, but they don't have it right now. So yeah. So I started like setting alerts, and it really helps because I trade NQ, and then I trade gold futures, and then I trade MNQ. I trade MGC, which is micro gold futures, and then I trade SL. I don't know what the micro version of that is, but the micro version of silver futures is what I trade. So if you're switching between a lot of assets, then you definitely want to be setting alerts, so then you have an idea of what to look for, and you don't have to constantly be switching. You can just set an alert, and then just you don't really need to worry about it, right? Because it's gonna alert you when price hits that point. So that's a really good way of doing that. So yeah, hopefully this video wasn't too long. I think it's probably like 20 minutes, 15 minutes. So yeah, hopefully it's good. But yeah, that's it. Bro. Okay.